This is Nightly Business Report with Sue Herrera and Bill Griffin.
Wall Street's big week, from earnings to the Fed to trade and jobs. Why the next few days could redefine the market as investors know it.
Big pharma deal. Pfizer is merging its off-patent business with Mylan, creating a new company that controls a number of blockbuster medicines.
Battle Royale in the entertainment industry. Competitive video game playing is taking off, and it could be at the expense of Hollywood. Those stories and much more tonight on Nightly Business Report for Monday, July 29th.
Good evening, everyone, and welcome. Four pillars of this stock market converge over the next few days. First, there's earnings. This is the busiest week for quarterly results of the season. Then there's the Federal Reserve, which begins its two-day policy meeting tomorrow with a decision on interest rates due on Wednesday. Trade talks between the U.S. and China are set to resume, and the nation's labor market, which has been fueling the consumer, comes into focus with the release of the monthly jobs report. But today, investors were willing to wait and see what happens, with the major indexes hovering around their all-time highs. The Dow Jones Industrial Average rose 28 points to 27,221. The Nasdaq fell 36, and the S&P 500 was down 4. Bob Pisani has more on what lies ahead for investors.
Let's call it the calm before the storm. The market is bracing for the busiest week for both earnings and the global economy, and a Fed meeting on top of that. So right now, investors are reassured by three things. First, trade talks haven't blown up yet. Second, central banks are keeping interest rates low and will continue to do so. And third, earnings are not collapsing. They're flattish, but they're not collapsing. First on trade, U.S. Treasury Secretary Steve Mnuchin is in Shanghai to restart trade talks. The markets aren't expecting any kind of breakthrough. They just need to see that talks are continuing and not faltering, and the market seems content with that, at least for now. Second, the earnings roster was light today, but later in the week, we'll get results from consumer names like Clorox and Procter & Gamble, tech titans like Apple and Samsung, and Chevron and ExxonMobil. The market needs to see the guidance is still coming in better than expected, and the tech earnings in particular don't weigh estimates down. And finally, on the economy, the markets are expecting the Federal Reserve to cut rates by at least a quarter point on Wednesday, but there's still a minority who believe that the Fed will cut by a larger 50 basis points as the global economy is a bit weaker. It's difficult to say whether 25 basis points will be enough to sate the market's appetite for more stimulus, or whether it could spark a modest sell-off. The Fed will have plenty of data to watch ahead of its decision, including U.S. data on personal income and spending, home sales and consumer confidence. Also, we have manufacturing data from China and European retail sales. We'll also get the widely watched July jobs report on Friday, expected to show a gain of 166,000 jobs in the U.S. last month. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
A former chair of the Federal Reserve is throwing her support behind an interest rate cut. Janet Yellen says the move is justified because of low inflation and the weaker global economy. She says what happens in the rest of the world affects us.
Although the U.S. is doing well, I would be focused on wanting to keep it doing well, to keep the expansion on track. And I think in light of the risks, I would be inclined to cut a bit. I wouldn't see this as the beginning, unless things change, of a major easing cycle.
She made those comments yesterday at the Aspen Institute's Economic Strategy Group meeting.
So let's turn now to Mark Lucchini to discuss what this big week for the market will mean for you. He is the Chief Investment Strategist at Janney Montgomery Scott. Good to see you again, Mark. Welcome back.
You as well. Thank you, Sue.
So there is an awful lot on the market's plate this week. Is there one of those events that we've highlighted that you think will take precedence over the other?
Hardly. The one that's tangible, of course, is the Fed meeting. There's no doubt that it is occurring, number one. And number two, there's no doubt there's going to be some decision coming from it. The one Friday, of course, the jobs report is going to give us a finite reading in the labor market. It's the trade negotiation that remains somewhat ambiguous relative to whether anything will be resolved here over the coming days or not. And we've seen this movie before where these trade talks end and they, subsequently pick up again at some later date. So I think the market's really baking in expectations around a Fed policy shift that's going to be supportive of equity prices. And so it won't be so much the policy move, I think, as the accompanying comments that follow by way of the press discussion Jay Powell will have, offering up some color around the decision that was ultimately made.
Let me ask it another way, Mark. Is the greatest risk to the upside or the downside for the stock market? Here we said, as Sue pointed out, at all-time highs. That would suggest that all the good news has already been factored into this market. So is the greatest risk to the downside, do you think?
Tyler, I do. I don't think it's substantial. I don't think necessarily anything that we're going to hear is going to substantively change the direction of the market over the balance of the next, say, 3 to 6 months. But certainly we could see some pressure applied to equity prices should the Fed come out by way of either no rate cut, which would be a huge shock to the market, or even a 25 basis point without accompanying language that is equally dovish relative to the prospects of further rate cuts, since the market's expecting 2, if not 3, before year end.
Mark, let me turn you to earnings, because to Bill's point, given the fact that we have the market sitting at all-time highs, do you anticipate increased volatility as these earnings come in individual stocks, depending on, of course, how those reports come in?
Well, I think most definitely. What is notorious is the fact that early on in earnings season, we tend to see results that beat more often than disappoint. And as earnings season wears on, the disappointments start to come through a little bit more feverishly. And of course, what we know is that earnings overall aren't expected to be up or up much for this quarter. And of course, it puts a lot of pressure on what we're going to see over the back end of this year and into 2020 to bail out a market that's trading at a fairly demanding 17 or 18 times forward, depending upon how near or far out you'll stretch your consensus estimates for S&P 500 earnings. And again, that plays back into why it's important that we see the other news flow be generally supportive, because valuations on a standalone basis don't warrant equity prices moving substantively higher from here.
Mark, thank you. Mark Lucchini with Janney Montgomery Scott.
I really need to wear a name tag or something. Pfizer and Mylan are merging parts of their businesses now to create a new company that will be one of the biggest sellers of off-patent medicines. The industry has been facing pressure, of course, from Washington over high drug prices, which has led to a spate of recent deals, including Bristol Myers buying Celgene and AbbVie's purchase of Allergan. Reaction to today's deal was mixed. Mylan was one of the best performing stocks in the market today, up more than 12%, while Dow component Pfizer fell. Meg Terrell has details.
The United States is about to get a brand new drug company, selling medicines from Mylan's EpiPen to Pfizer's Lipitor and Viagra. Those are some of the world's best-known medicines, but they've lost patent protection, and Pfizer, the world's largest drug maker, is ready to go in a new direction. In a deal announced today, Pfizer will spin off a unit it calls Upjohn and combine that business with generic drug maker Mylan. It'll create a sizable new company, yet to be named, with sales of up to $20 billion next year. The merger also marks the closing of a chapter for Mylan CEO Heather Bresch. She's going to retire from Mylan with the closing of the deal. Bresch is perhaps best known by the public for defending Mylan's price increases on the EpiPen, an episode that contributed to the stock's major decline over the past few years. Mylan's chairman, Robert Coury, will be executive chairman of the new company, while Pfizer's head of Upjohn, Michael Gettler, will be CEO. The deal is the culmination of a year-long strategic review at Mylan, which the company undertook amid pressure on U.S. generic drug prices and a government investigation into price collusion in the industry.
I'll be the first to admit I was one of the skeptics about Mylan, that Mylan could get, a solution for its situation. But clearly they found just the right party to merge with, who had, a lot of cash flow and also was willing to do the deal.
Pfizer also reported its second quarter results today, with revenue missing Wall Street's estimates. For that company, the deal marks a further streamlining of its business under new CEO Albert Bourla to one focused on medicines and vaccines still protected by patents, and which can command higher price tags. For Nightly Business Report, I'm Meg Terrell.
Meg just mentioned that Pfizer reported soft revenue for the most recent quarter, but it also saw a 30% rise in profit thanks to demand for its branded medicines. That report, by the way, was released a day earlier than planned.
It is time to take a look at some of today's upgrades and downgrades. UPS was downgraded to hold from buy at Stifel. The analyst cites the challenging macro environment heading into year's end. The price target is $118. The stock closed right at that level, $118.75. Starbucks was downgraded to neutral from overweight at JP Morgan. The analyst says a rise in the stock price is limited following a 90% gain over the past 12 months. The price target is 91. The stock fell 1% to 98.02.
American Airlines was downgraded to neutral from outperformance Macquarie, with the analyst citing challenges facing the whole industry and the ongoing mechanics union slowdown specifically. That price target is now $34. The stock fell more than 1.5% today to $30.74. Anheuser-Busch InBev was upgraded to buy from neutral at Bank of America Merrill Lynch. The analyst says that the cycle of negative earnings revisions from that company is coming to an end. Price target $118. The stock gained 1% to 101.67.
Still ahead, the fast lane. United Airlines wants to make it easier for you to get through security using your fingertips and your eyes.
Credit rating agency Standard & Poor's warned today that it may lower Boeing's credit rating due to the ongoing grounding of the company's 737 MAX airplane. S&P says a prolonged grounding could damage Boeing's financials and result in a loss of market share. Last week, Moody's and Fitch issued similar warnings. Boeing stock fell during today's session.
The head of the European discount airline Ryanair said the prolonged grounding of the MAX could lead to job cuts at his company. CEO Michael O'Leary said he's concerned Ryanair will receive 0 planes by next summer, which could eat into that carrier's growth outlook. On an earnings call, O'Leary had some choice words for Boeing, which required us to bleep one out.
We were originally expecting 58 aircraft for the summer of 2020. That's now 30 at best. It may well move to 20, it could move to 10, and it could well move to 0 if Boeing don't get their together pretty quickly with the regulators.
Regulators have not said when they will allow the planes to fly again and have not given a timeline.
United Airlines and security firm Clear are teaming up to bring biometric screening to more airports around the country. And as Phil LeBeau reports, it's part of a growing trend where your eyes and your fingertips will eventually get you through security faster.
Clear, which uses biometrics like your fingerprints or eyes to confirm your identity so you move through TSA checkpoints faster, is teaming up with United Airlines to expand its presence in airports.
It's been about bringing on the partners who want to use it. And Delta was an early adopter. United's now come on, and they are so excited about changing their customer experience from curb to gate.
Getting passengers through airports with fewer headaches is one reason United is buying a stake in Clear. It's also adding Clear kiosks to its hubs, like Chicago O'Hare. But there's a larger trend here. Biometrics are increasingly replacing the need to show your ID. Delta uses facial recognition instead of checking passports to board passengers on some international flights. Now Clear is expanding beyond the airport to Hertz rental car lanes, some stadium entrances, and soon for buying something in the airport or during a flight. Clear's goal? Ending the hassle of taking out a credit card.
I was at LAX last night in line at, getting magazines, and you're finding your wallet, finding your credit card, and none of them are good customer experiences and kind of painful, specifically when you have big bags like me. So I think over the next 12 months, it will be here.
Even though joining Clear can cost well over $100, it is clear many do want to be clear. In fact, the security program now has almost 4 million subscribers. Phil LeBeau, Nightly Business Report, Chicago.
Exact Sciences strengthens its stronghold in cancer screenings. That's where we begin tonight's market focus. The cancer diagnostic company will buy Genomic Health for nearly $3 billion. The acquisition will help Exact Sciences expand its testing for breast and prostate cancers. Separately, Exact Sciences reported mixed quarterly results, missing earnings expectations, but topping revenue estimates. Shares of Exact Sciences fell a fraction to $117.57. Genomic Health shares rose more than 6% to $73.07. Sanofi posted better than expected results thanks to an increase in sales of vaccines and rare disease products. The drug maker also raised its full-year guidance. The stock was up more than 1.5% to 43.03. Cooper Tire and Rubber missed earnings and revenue expectations due to costs connected to new tariffs on imports from China. It was also hit by restructuring costs related to a facility in London where it halted light vehicle tire production. The company lowered its full-year outlook. The stock dropped more than 9% to $27.55.
Uber is laying off 400 employees in its marketing department. That's about a quarter of the marketing team's global workforce. The company says the restructuring is going to help Uber focus on its brand across audiences, products, and regions. Stock fell more than 1% today to 43.88. Then after the bell, Transocean missed analyst expectations. The offshore drilling company also reported weaker than expected revenue. The CEO cited uncertainty around oil prices, but added that offshore projects do remain attractive. Shares were falling in after-hours trading tonight. They closed the regular session down near 4% to 537. Also after the bell, AK Steel posted mixed results, beating Wall Street's earnings forecast, but reported a shortfall in revenue. The steel company saw a decrease in shipments to the automotive market. Shares were volatile in the after-hours session. As you can see, they closed the regular day up more than 2% to 254.
Sales are growing fast at Beyond Meat. The plant-based burger maker reported better than expected revenue and raised its forecast, but its quarterly loss was wider than forecasts. The company also said it plans to issue additional shares of stock in what is known as a secondary offering, and that caused the stock to fall in initial after-hours trading. Aditi Roy has more on Beyond Meat's results.
Beyond Meat says it will bring in more revenues in 2019 than it previously thought. The company projects $240 million in sales in 2019, up from the $210 million the company previously predicted last quarter. Most of the increase is folded into the company's second quarter revenue beat. Why the change? One driver of top-line growth is new partnerships. In the last 2 weeks alone, we've seen Beyond Meat land deals with Dunkin' Donuts and Blue Apron. The company also cites an increase in sales volumes of its products and greater demand from existing customers. It remains to be seen how Beyond Meat fares with increasing competition from companies like Tyson Foods and Impossible Foods. For Nightly Business Report, I'm Aditi Roy, San Francisco.
And coming up, the entertainment industry is changing, and there's big money following it. Here's what we're watching tomorrow. As we mentioned earlier, the Fed policymakers begin their two-day meeting on interest rates tomorrow. Trade talks between the U.S. and China begin in Shanghai. Then Apple reports earnings. Investors are going to be looking for an update on its services business as well as demand for its flagship iPhone. So another busy day coming up on Tuesday.
A 3-day Fortnite tournament turned a teenager into a millionaire. It also highlighted the big money, power, and influence of the competitive esports industry. Josh Lipton has more.
It's official. Kyle Giersdorf, a.k.a. Booga, is the best Fortnite player on the planet. A 16-year-old gamer from Pennsylvania, he just won the first ever Fortnite World Cup. His prize? $3 million, the largest single payout in esports history. The competition took place at Arthur Ashe Stadium in New York City. 59,000 tickets were sold, and a whole lot more fans watched online. Nearly 10 million views on YouTube on the final day of competition.
Feels amazing. I mean, I might be 30 years old, but I'm here. Let's go. Yeah.
Honestly, it's been crazy, dude. I did not expect this many people to show up, this many fans. It's been an awesome experience all around.
The event speaks to the powerhouse that is Fortnite, a game that boasts more than 250 million players and nearly $4 billion in estimated revenue. It also showcases the popularity of esports. It might sound crazy to some, but people really do like watching other people play video games for big prize pools. 454 million people will watch esports this year, a jump of 15%, and revenue will grow nearly 30% to more than $1 billion, mostly from media rights, advertising, and sponsorships. Who is watching esports? More than 80% of the audience is male, according to Nielsen. The average age is 25, with an annual household income of $70,000. For Nightly Business Report, I'm Josh Lipton, San Francisco.
And as people spend more time streaming video game tournaments, they're spending less time in movie theaters. And the business minds in Hollywood are very well aware of the intensifying competition. Julia Borston has that part of the story for us.
Despite some mega hits, the movie industry is facing some big challenges.
Here you are, enjoy.
The domestic box office is down nearly 7% from last year, which was a record. The drop comes as options increase for consumers, including free or inexpensive content at home. There's the explosion of interest in esports and the increasing number of new exclusive content, both movies and TV shows made with big budgets, for streaming on the small screen, thanks to Netflix, Amazon, and others ramping up their spending. All this raising the bar for the studios. They need bigger brands and bigger budgets for their movies to stick out from the clutter. The studio that's consistently giving consumers reason to leave the house and buy tickets is Disney. It's just broken its own all-time annual box office record, and it's only July. Bolstered by Lion King, which has now grossed nearly $1 billion worldwide, the studio has set a new record for the biggest studio gross in a year, $7.7 billion. Disney has the 5 biggest films of 2019.
I won't let anything happen to her.
And Disney's dominance is expected to continue with Frozen 2 in November, and in December, Star Wars: The Rise of Skywalker, both expected to hit $1 billion.
They really do dominate. But in the entertainment market, I don't think you feel, or the people's time market, I don't know if it's the entertainment market anymore. I think they have plenty of competitors and lots of choices. They just are making content people love.
The question is how much higher the bar will be for the movie industry when the media giants give consumers even more options for new exclusive content at home, with Disney Plus and Apple TV Plus launching in the fall, then NBC Universal's new streaming service and HBO Max launching in the spring. Once again, Disney may be best positioned, as it will be able to use its mega franchises such as Marvel and Star Wars to drive fans of its movies to subscribe to its new streaming service and fans of the service back to theaters. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And there's a new report tonight that Netflix is investing more than $520 million, I should say, to make 3 big budget films. The decision comes amid slowing subscriber growth. And according to the Wall Street Journal, the move is part of a bigger push into the entertainment industry, once controlled by big Hollywood studios. Analysts expect Netflix to spend $15 billion on programming this year.
So where is this shift in viewing habits taking the entertainment industry? Joining us tonight is Paul Shanley. He covers the gaming business for The Hollywood Reporter. Paul, thanks for joining us tonight.
Hi, it's Patrick.
Patrick, I apologize.
It's all right.
I was called Tyler earlier, so we're all mixed up tonight.
We're having a rough day.
Exactly. Yeah. I am just gobsmacked by the number of people who filled Arthur Ashe Stadium. It's the biggest tennis venue in the world, and they're going to watch other people play video games. Where is the esports industry going here?
Up is the easiest answer to that question. It is something that's been growing significantly since about 2012 stateside, but globally it's been a phenomenon for a long time, mostly in Asian markets.
Now, we just had a report about how that might and is impacting the movie industry. Do you see a confluence where they both coexist, or maybe the movie industry can benefit from this new esport craze?
Well, we're seeing a lot of video game adaptations on the big screen. There's some planned. There's some that already came out. Earlier this year, Detective Pikachu became the highest grossing video game film of all time. But that trend isn't going to go away anytime soon. It's also happening on the small screen. In terms of movies competing with video games, and especially esports, it's hard to say because really we're talking just about eyeballs at this point. There's only so many hours in a day, and people can be on their phones watching content at any given point in any day. So it's really just who can get the most eyeballs. Even Reed Hastings himself from Netflix, he said that they compete with and lose to Fortnite more than they do with HBO. So video games aren't going anywhere. They're really a booming industry right now.
You know, when I saw that they were at Ash Stadium, I'm thinking, are they going to build their own stadiums at some point? I mean, is there an infrastructure to be built for the esports business, do you think?
Comcast certainly seems to think so. Comcast obviously is a media giant. They're the second biggest cable provider on the planet, I believe. They are investing $50 million to make an esports stadium for the Overwatch League team that they own, the Philadelphia Fusion. That's being built now. I'm not sure exactly when it's going to open, but obviously they're putting a lot of money into that. We already have a stadium here in Los Angeles. It's where they used to film The Tonight Show with Johnny Carson. It's over in Burbank, and that's where all the Overwatch games are held right now. But yeah, this is definitely something that's going to start happening across the country.
So what companies do you think have the advantage? Obviously, the company behind Fortnite right now, but you know, Apex Legends launched, and I know my kids preferred Fortnite to that. So what companies are you watching on the cutting edge?
Epic Games is definitely one that we watch. Epic Games are the maker of Fortnite. I mean, they made $2 billion last year with just Fortnite, which is a pretty unbelievable number. You mentioned Apex Legends. That's a company called EA, Electronic Arts. They've been around for a very long time, but they're definitely one of the biggest players in the space. Apex Legends was kind of their answer to Fortnite. It's a battle royale model, which is the name of the genre of games. So there's a lot of these bigger movers and shakers, things like Take-Two. Right. You have the EAs, you have the Activisions. Activision Blizzard does Overwatch. So it's a lot of the power players in video games, but also you're seeing Hollywood get into it too. There's a Bad Robot from J.J. Abrams. They launched a games division last year.
Very good.
Lots of them.
Patrick, thank you. Nice to see you. Thanks for joining us.
Appreciate it. Thank you very much.
You bet.
That's it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.
Yes, you are.
That's right.